Most traders make the mistake where they fill up their charts with too many indicators, and it always ends up being a huge confusion. And what I have understood is that all you need is one tool that you understand and that you can use every single day. So by the end of this video, you will understand how one little tool can change it all. So let's get into it. But before I get into the actual model, I just want to show you my results for the past 2 months. You can see this is June of 2026, and then you can see the July, which is the ongoing month of 2026, and you can see the results, and you can see almost $50,000 in under 2 months. So now that you know that I'm actually trading what I'm teaching you, let's get into it. So first we need to set some goals for this video. So for today's videos, we are going to learn how to make profits in 1 hour after the market open using this exact strategy, and then we are going to learn how to become consistently profitable day trader after implementing the model, because we want to become consistent. We don't want to just chase quick profits, we actually want to consistently make money out of the market. So the stuff that you can forget about is the daily bias. You can forget about thousands of fancy concepts and looking at charts 24/7, because we need one simple indicator, just a few simple concepts, and only 60 to 90 minutes after the market open. So there is 3 simple things that we are going to focus on, and those 3 things are marking out the liquidity on the chart. And basically this is what the indicator is going to be used for, because it's going to do it for us. And of course we are going to have full understanding of why does it actually work. Then we are going to wait for the manipulation of those levels that an indicator is going to mark for us, and then of course all we gotta do is we gotta enter the market, put a stop loss, and put a take profit, and just wait to see what is the actual outcome gonna be. So instead of complicating the charts with useless analysis, we are just gonna use one indicator and a few simple steps, so you can forget about all of the complicated indicators and the complicated confluences on the chart, because it's all going to be simplified, because in the end the simplicity is profitability. So the step number 1 is going to be to turn on the indicator and to actually set it up. So the name of the indicator is going to be the ICT kill zones plus pivots from this guy, Trade for Op, and of course all you have to do is press on it. You can also press the favorite, so it's always going to be on the trading view first on the list. And when you get the indicator on, all you have to do is not change anything except these boxes that I've shown right here. So basically all you need to do is unmark all of these right here and only leave the London one marked. And of course you can copy the hours from me, and you can copy the color too if you like my color, so it doesn't confuse you. And that is basically it. Now that you have it set up, it's already gonna show something on the chart, which is going to be the step number 1 too, because of course it is just going to show us a high and the low of the London session. So the first thing that we need to understand is, why does this actually make sense? So the whole idea behind this model is that within the market session there is a lot of players that enter long and short positions. So basically what that means is there is orders all over the place in the market. But the 2 points that are going to be very attractive liquidity points, and what do I mean by liquidity points? Those are the points, the highs and the lows, that are filled with the stop losses. And the one thing that market likes to do, the banks and the institutions and basically the market makers who move the market, is they basically like to sweep the stop losses of other people to of course manipulate them and to take them out of the market. So basically when we get a high and then the low of the London session in the market, all we can imagine is that this high right here is just thousands and thousands and thousands of stop losses of course day traders that are just waiting to be manipulated out. And then of course this low right here is still the same thing, a thousands and thousands and thousands of stop losses that are waiting to be manipulated out. So that is the whole idea, because market is always hunting liquidity, or in the other words, it's always hunting the stop losses in the market. So the step number 1 is done when the indicator is turned on and when it's marking out these key areas. The step number 2 is going to be to wait for the one side to be swept. So basically the step number 2 is just a waiting game to see if either the upside is going to get manipulated like this, or the downside is going to get manipulated first. So since the upside was manipulated like this, so you can see we made a move to the upside, we swept this high right here. The next step is basically to just scale down to a lower time frame. So it's going to be a 1 minute time frame where we are going to enter the market, and we are just going to target the opposite liquidity. So basically we're going to target another side of the market. So the whole logic behind it is that right here we manipulated to the upside, took out all of the stop losses, and then after that what we did is we of course manipulated the downside, taking out all the stop losses from this low too. So the whole logic is going to be to go to the lower time frame and to take an entry in the market. And of course we have the exact rules for the entry. It's not going to be something that you have to eyeball. We have all the rules in the place so that you don't have to think if you are doing anything wrong or anything right. All you have to do is follow the steps and the rules, and that's it. So right now these are all the steps for the model. So basically we wait for the manipulation of one side, targeting the opposite. But one more thing we are missing is what is the entry model. So the entry model is going to be really simple. So this example right here is when the market is going to the downside and basically going to manipulate the downside of the session. So basically in this example we took out the London low, and what we want to do is we want to target the London high. So in this example we left a fair value gap, we left a bearish fair value gap. And what is a bearish fair value gap? It was a fair value gap that was made while we were going to the downside, of course, to manipulate that low. So when we left a bearish fair value gap in the market, usually fair value gaps are used for us to retest them, and then they are going to support the market and push it to the direction of the fair value gap. But in this example, since we want to see a upside getting targeted and of course London high getting swept, we want to wait for something a lot smarter, which is going to be for this fair value gap right here to actually fail, because that is a clear sign that the market does not want to progress the downside, but it actually wants to reverse, so close above and then continue to the upside, and that looks something like this. So we want to see a body closure, which is of course a blue part of the candle, so this one right here. We want to see a body closure above this fair value gap, which is going to tell us a clear sign of us actually wanting to go to the upside and of course wanting to go take out that high. And then in this example, when we let's say have manipulated the London high, we want to target the London low down here. Basically we want to see a bullish fair value gap, which is a fair value gap created while going to the upside. And then of course we don't want to see it respected like this, but we actually want to see it disrespected, so with a body closure below, and then we enter the market on the closure, and then we target the downside. So now that you know the steps and you know the entry model, we can just get straight into the examples. Okay, so here we are in the market. So right now the first step is what I already told you, is to find and turn on the indicator, and then the second step is to set it up, of course like this, to only show the London session. So basically when you've done this, you are going to have something like this in the market. And basically, as we already know, we are done with the step number one, because right now we have a high right here that is basically a big probability area that is going to get swept, because at this high there is a lot of stop losses, and then at this low right here there is also a lot of stop losses. So what do we want to do? We want to see right now, is the market going to manipulate down, or is the market going to manipulate up, and then of course target the other direction. So the second step is to just wait and see what side the market is going to actually manipulate first. So in this example it looks like it's going to be the upside, but before we actually sweep that high, we are just going to go to the lower time frame, which I told you is 1 minute time frame, and we are going to wait for a fair value gap to be made so that we can actually enter the market. So in this example, if I fast forward the market to see if we are actually going to sweep this high, you can see that we are progressing really nicely, and there was the sweep. So right now what is important for us is to spot the latest fair value gaps, and first one is right here. So you can see this is a fair value gap that is still holding up, and then we have one right below it that was already tapped in. So for the entry, we actually want to see these two fair value gaps getting disrespected like this, so that we can enter the market to the downside. So if I fast forward the market, you can see right there a closure below this fair value gap. So what we do is we enter the market, we can put our stop loss somewhere above the fair value gaps, above the bodies, and what we do is we scale out the market. So basically like this, you can see this is the high of the London, and then this is the low. Of course this is a huge target. This is not going to happen every day in the market, but let's see if this one is actually going to play out, because a lot more times in the market you are going to have smaller targets and you are going to have smaller risk to reward. So you can see right here in the end we played out this trade perfectly. So if I scale out to a bit of a higher time frame, you can see the perfect picture. So we had a London high, perfectly got manipulated, and then we perfectly targeted the London low. But now I'm going to actually show you a trick on how you can do this with multiple sessions. So it's going to be a bit more complicated, but it's going to be a nice trick to get your win rate up and to just get more setups in the market. But before I do that, before I go to the next example with that trick, make sure to subscribe to the channel if you already haven't, because it just makes me motivated to keep posting these videos. And of course, like and comment any questions that you have. And also make sure to check out some stuff in the description, for example, like one-on-one mentorship, and then also some propfirms discount if you are maybe interested in getting them. So right now, let's get into the next example. Okay, so this right here is the second example, but on this example, we are actually going to do something with the indicator. So when we double click on it, we are going to of course get this menu, and what we want to do is we want to turn on the Asia session too. So the Asia session is going to be the same logic as the London session. So basically, all we are going to get is few more liquidity points. So right now, we can see that we have this high in the market, we can see that we have a London low, but then we can see that we have a resting Asia low down here. So basically what that can be used, as a target to get a bigger risk to reward and to just have more confidence that the market is really likely to go and sweep these two to the downside. So right now, what we want to see really likely in the market is market expanding to the upside, taking out, of course, the London high, and then just completely dumping and manipulating these two. So what we can do is we can wait for the market to actually go and manipulate to the upside, and it's doing that. So you can see we are actually getting really close to it. So right now what we can actually do, which is a smart trick, because some of you maybe want to take parcels, we can mark out these guys manually, and then of course we can write London low and basically we can write Asia low. This is just a trick that maybe it's going to be easier for you to understand kind of what low or what high are we dealing with. So this is, for example, an Asia low and then a London low. So now that we are in the position, we know exactly which low we are coming across. So right now all we need to do, since we almost swept the London high, we want to scale down to the lower time frame. So on the 1 minute time frame, all we are waiting for is this London high to of course be manipulated, because that is just going to lead to kind of us having a setup. So if we are just waiting, you can see that we finally got the manipulation right there. So all we want to do is we want to see the last fair value gap get inversed, and for example that is this fair value gap at the moment right now. So if I fast forward the market, all we want to see is a disrespect of this fair value gap, and let's see if we are going to get it right here. So there it is. So you can see we beautifully disrespected it, just close below it. So what do? We enter the position. We also have a fair value gap right here that can support our stop loss, so we can put our stop loss just above it. And then what we do is if we scale to the downside, you can see that right here we have a London low, and then right here we have Asia low. So of course you can target this London low as a first take profit, or you can just target the overall Asia low, of course, as the risk to reward is bigger. So for example here, $1,000 risk for $10,000 return. Of course the win rate is going to go down, but we are going to have much more return on the positions. So if I fast forward the market right now, let's see what is going to happen. So right now we are slowly just progressing to the downside, and then you can see if we zoom out, in the end we just completely skyrocketed to the downside. So you can see London low got taken, and then we just straight dumped for the Asia low, which got swept right here. So this position actually lasted only 40 minutes, and we made in total of 10 risk to reward, which is just absolutely insane. And of course this doesn't happen every day in the market, because if it did, all of us could easily be millionaires. Of course, you have to be patient with it and just stick to the execution and just be consistent. Just before you leave the video, I just want to give you actually something for completely free. So down there below the video, you're going to have some free resources that are going to be really good to watch, and they're just going to get you a little bit more experience with this model. Also, all the propfirm discounts are below if you are interested in actually getting them to of course start trading. And one of the most important things, if some of you are actually serious about trading and actually want to kind of jumpstart the whole journey, there is also a one-on-one mentorship application down there, which basically if you are lucky and dedicated, you actually may get to be a part of it, because of course it's limited with spots because it's one-on-one. So everybody is working directly with me. And basically with all of that being said, I really do hope that you enjoyed the video. Make sure to subscribe to the channel, like the video, and comment any questions you have. And with all of that being said, I'm gonna see you in the next video. Peace.